Hey everyone, this is Wilson, and recently I made a couple option trades where the call actually expired within the money. So I was talking to some of the people in my community, in my investing community about it, and people, the newer traders, like to ask the question: so what happens when when the option expires in the money and you didn't close out on it, right? So it's a real life example. This happened exactly to me. So I bought Disney calls. Disney has been a stock where I predicted that it will be going up. My call was set to $97 as the strike price. And what happened was that over the weekend, it passed expiration and that didn't close out the options. So what happens in that situation when you buy a call option and it expires in the money? Because over the weekend, as you can tell, it was somewhere, let's see, it was somewhere in the 98s, like 98.50 or something like that. So what happened was that my options automatically exercised, and according to law, the brokerage is required to exercise any option that's within the money because that means you're in profit, right? Now the downside of that is that they actually execute it at market price. So the price that they executed at was at 98. I think it was like 98.50 or something like that. But my call was supposed to be at 97. And what happens is that I end up holding 100 shares of Disney because it was one call, one option call. So it automatically executes. Now, some people ask, what happens if you don't have enough money in your brokerage account when it exercises? Then, depending on the situation, usually what happens is that the margin team of the brokerage is able to see it and they can actually deny it, which has happened to me before. But a lot of times, probably I would say 80% of the time, what happens is that your options will actually, your brokerage account will actually go in a negative balance if you don't have enough money to cover it because they buy the shares. If your options are not in the money, then it will expire worthless. So at the same day, I made a couple bad calls from the past where it was on Facebook. I bought a couple options on Facebook and they expired outside of the money. I wasn't even near the profit, and those just automatically expired. But when it's in the money, it automatically gets exercised. So that's a tip for people that are looking to buy some options for income. That's what happens. Now, luckily with me, even though I bought the 100 shares at market price, which wasn't the price that I like limit orders. But even though it wasn't the price that I liked, I got very lucky today, and Disney just spiked up, and I was able to get a strong exit right before it hit its highs at around 99.55. So I was still able to profit from my 100 shares that I owned, but that doesn't go all the way. Like if you have another stock, then it just doesn't go that way. And remember, it takes time for the cash to settle. So hopefully I answered that simple question for you guys. What happens when the option expires in the money, and when it's out of the money, it just expires and you lose whatever price you pay for that option. So if you enjoyed this video, please hit the thumbs up and subscribe to this channel for more investing and trading tips.